Today we have with us a very esteemed guest, Mia Mansoor Manan Sahib. I'll give a brief introduction. Please bear in mind this is very short introduction compared to a long list of achievements and a long career, but I'll do my best to introduce him. So he is a fellow of the Institute of Chartered Accountants with over 40 years of experience in both public accounting firms and international banking. He started his career with Deloitte in London and later moved to Bahrain, where he played a key role in the country's banking industry, as well as working in the development of the regulatory framework for Islamic financial institutions there. He returned to the UK in 2004, where Mansoor Saab assisted in creating the UK's first Islamic bank, now Al Rayyan Bank. He's been involved in structuring Islamic products and financial transactions with Credit Suisse, and he has led a landmark deal, which includes a 2.5 billion convertible sukuk, which is a Sharia-compliant bond for a leading real estate developer in the UAE. He's established his own Sharia consultancy practice and is a director at Tijarat Capital, and he continues to promote Islamic finance in the UK. So he's with us today to give us a short talk, so I will hand over to him now to start his presentation.
Assalamu alaikum. Thank you very much, Shoaib Saab. Thank you for such an elaborate introduction to my background. The Islamic finance, as you probably all know, is a subject that tends to create much controversy. I mean, we hear claims that it's only a sugarcoating of conventional finance, and many say it is just irrelevant to modern financial needs. I hope that in the short time I have, I'll be able to outline the basis of Islamic finance and why it enables us to move away from conventional finance and to start to incorporate Islamic values in our commercial and financial transactions. So let me just put up the share the slide. Can you all see that?
You just need to share it again. No, share.
Okay. Can you see that?
It's just loading up. Yes, it's up. Thank you.
All right. Okay. So this is going to be a short talk on principle of Islamic finance, trade, and commerce. So missing one point. Okay. So I'll just quickly go through the Islamic finance framework, the main principles in Islamic products and services, and if we had time, to touch base on the Islamic products that are available in the market. Okay. To just start with, as an introduction, Islamic market actually is still a very small part of the financial system, the global financial system, but is actually becoming a major player, as we'll see later on. Our Jamaat, in fact, were the first ones to start promoting Islamic finance or Islamic economic principles. In fact,
Sanato Tijarat talks.
Hello, sorry, somebody talking? As I was mentioning, right, Hazrat Muslim Maud, in 1942 wrote his book, The New World Order of Islam, and then in 1945 he published, he gave a lecture, a landmark lecture on economic system of Islam, and in that one he was trying to basically compare the disadvantages of both capitalist, socialist, and communist systems, and why Islam was better for us to adopt. Okay. And then in 1967, Hazrat Muhammad Zafrullah Khan Sahab, Rahmatullah, he also wrote Islam and Human Rights and had a full chapter on Islamic economics principles. So they were promoting Islamic finance long before the industry started up. And then in 1992, previous Khalifa, Hazrat Khalifa Masih Rabia, Rahmullah, he, in his book called Islam Response to Contemporary Issues, wrote a whole chapter on the dangers of, again, communist and capitalist system, and the advantages of Islamic finance. And in fact, he warned about the fluctuations in, or the cycles that take place in global financial systems, from boom to bust. And in fact, it happened in 2001, and we're probably likely to see another one coming up soon. Our Jamaat work was mainly general in nature, just pointing out what are the basic Islamic values that we should adopt. We haven't come yet into the practicality of how to apply these concepts to the modern financial system. And the first financial, I will say, transactions started up sometime in practical transactions started up in Egypt in the 1960s. And then, of course, the petrodollar wealth that the Middle East got in the 1970s and 80s enable and the sector to really boom. And today, it is estimated to be about 3 trillion, right? And it spans from the Middle East to Indonesia. In fact, Australia also has set up the first Islamic bank. Its current growth is actually obviously led by AI and fintech solutions and the wider ESG movement that we all hear about. In the UK, I just want to tell you a very short story. A governor of the Bank of England, Eddie George, right, he once visited a Muslim community, and a couple came up to him and they said, "We have a complaint." And he said, "What complaint do you have?" They said that we can't buy a house. And he said, "Why you can't buy a house? Go and get a mortgage. And don't you have enough income to go and get a mortgage?" They say, "Yes, we can get a mortgage, but we don't want to because it is a haram for us. It involves interest, and we don't want to pay interest." And that got him thinking. There must be a large number of Muslims who are not taking advantage of the financial system. And he set up a group to look into this. And in fact, in 2003, they started up, I think, the first Islamic mortgages got introduced here. And then when I came to the UK in 2004 and 5 to set up the first Islamic bank, in fact, Ahmad Salam was also involved in that development. We had to sit across the table from the financial regulators and the tax guys in the treasury to explain to them what Islamic finance is about and how we can actually structure the first Islamic bank here. In fact, one of the key issues that we had was that in the UK, right, and in fact in all Western countries, the deposit that you give to banks is guaranteed to be returned. That is a fundamental law underpinning all financial systems or deposits and saving accounts that go into the banks here. That the banks have to guarantee the return of that. Whereas of course, we will come to see that under Islamic principles, you can't guarantee the return of capital. So the question is, how do you solve that issue? And that was a major issue that we had to overcome. And I'll come back to that later on as to how we solved it. Maybe those who are listening now can ponder over this as well. So in fact, the modern Islamic financial movement is really not trying to solve everything, but is providing a move away from conventional finance. And so the Muslims can carry out their economic activities based on Islamic values. Okay, so what are the fundamental principles underlying Islamic finance? Okay, firstly, we must recognize that everything belongs to Allah. In fact, in the Holy Quran, there is mentioned over 20 times that God is that everything in the heavens and the earth belongs to Him. Okay. In fact, all our wealth, our intellect, our resources, right, belongs to Allah. So a man came to this earth with nothing, and in fact, he will only go away with his deeds and nothing else. So what is man's responsibility? He's been appointed as a viceroy of God on the earth, Right? God says in the Holy Quran, whatsoever that He has made him a viceroy and subjected to him his service, whatever is in the heavens and whatever is in the earth. Right? And therefore, a trustee, so a person actually is a trustee of the wealth and resources and the intellect that God has given him. Right? And it and in the Holy Quran it says that if you don't act in accordance with it, right, you shall be answerable for your neglect and will only suffer loss, but will also incur the displeasure of Allah. So this is a fundamental principle upon which Islamic finance is based, or Islamic trade and finance is based. That everything belongs to God, and we are only His trustees to use the wealth in a beneficial manner. So Islam, as you all know, means peace, and peace with God and fellow beings. And to achieve the peace, we have to follow Sharia. So what is Sharia? I mean, all of us know what Sharia means, right? But just to give you a quick overview, okay, Sharia actually is a framework that governs all our lives, Muslim lives. It is a divine law, but the understanding and interpretation of Sharia is known as fiqh, and any pronouncement are known as fatwa. And over the ages, the fiqh has been divided into two main categories. One is called fiqh ibadat, which is how we worship, how we do ablution, how do we, doing hajj, etc. And fiqh muamalat, which is how we transact with other people socially and on economic basis. So Islamic finance, therefore, is based on fiqh muamalat. So, and this, although Sharia is a divine law and it doesn't change over time, fiqh itself is capable of development and interpretation. Right? The process is ongoing to develop products and services for the modern age. And what are the primary sources? Now, as Ahmadis, we all know that the primary sources of Sharia are the Holy Quran and the Sunnah. But one matter that I just want to highlight is that in many cases, there were practices, the Muslims were engaged in certain practices of doing trade and in fact lending money that the Holy Prophet ﷺ evidently approved, and therefore these have been used to develop the modern Islamic products. Right. The secondary sources of Sharia, right, just to let you know the terminology, right, is first thing is ijma. This is a consensus among the scholars. I mean, like there was in the let's say early 50s, right, many Egyptian scholars said no interest is allowed, okay, because Islam only prohibits usury, which is excess, high amount of interest, but normal interest, which is charged by banks, is allowed. Right? But then the scholars realized that this is wrong interpretation, and they started to ban all form of interest. Qiyas is a deduction by analogy. I mean, just like, we say that wine is intoxicant, and so based on that, we prohibit drugs and other things that leads to that. And ijtihad is the most important element, which is the ongoing development of Sharia, right, based on scholarly reasoning. Just to give an example, when you talk about insurance is not allowed in Islam, but there is a form of insurance called takaful, and that is, done through ijtihad. So what are the main doctrines in Islamic, Sharia law? Now, of course, before the promised Messiah, right, there were two main schools of Sharia law, which is the Sunni and the Sharia, and the Sunni schools and the Sharia schools. I mean, on the Sunni ones, right, you have the famous scholars like Imam Abu Hanafi, Imam Maliki, Imam Shafi, Imam Ahmad. Where there's a story about Imam Hanafi that he had lent money to a friend of his, and he went, and I mean the time to collect it was around midday. He went there to his friend's house, and he stood out in the sun. And although his friend had a tree right next to his door, but he didn't stand under the door. And when his friend came out, he said, "Imam Sahib, why are you standing in the heat?" And he said, "Well, I don't want to take any advantage from you, because it will not be allowed, because I don't want to take any advantage from the loan I have given to you." So these are the schools, and of course, these are the principles that they developed, and which, in particular, regard to finance and trade, that are being used by the modern scholars now. Okay, so along with the scholarly work that went into developing Sharia for modern financial needs, uh, the market actually grew, and they set up regulatory framework within countries. I mean, we have what's called parallel systems, where you have both Islamic banking and conventional banking work, on alongside each other. And these are mainly, you started off in Malaysia and Bahrain, and now are widely established in all Muslim countries. And then the industry also set up major bodies. There's the Fiqh Academy in Jeddah that was set up, in the late 1960s. IOFI, which is Accounting Auditing Organization for Islamic Institutions, that actually is an interesting body, because I attended a lot of their meetings, and sometimes they will go on for days discussing a particular topic, because many scholars will not agree to a particular a sign off on a particular product. And that actually has done a great deal, because they've issued two types of standards. They issued accounting and governance standards, and they've also issued what we call Sharia standards. And each product that market today, but they have thoroughly researched those, and given an opinion as to why those products are allowable under Sharia. In fact, there's a continuous development going on in revising those standards as well. And there was an Islamic Development Bank that was set up by all the Muslim countries way back in 1975. And this continues to act as like a central bank for the Muslim institutions. Now, one thing just want to point out is that in what we call the so-called Islamic institutions that you have, they have to have a Sharia board. Normally, they have about 3 scholars on the board, and the 3 scholars have to give, or have to have at least majority opinion before anything is accepted to be done by those banks. In the UK, our Jamaat, Alhamdulillah, I set up a committee just before, I think it was before COVID, to consider Islamic mortgages. And I think opinion has been given on that. I was involved, Dr. Hussain Khan was also involved in giving opinion on that. But we haven't yet received a proper acknowledgement of what is allowed. And I understand now that there is also an international body has been set up by to guide members on this. And hopefully, inshallah, we should be able to get some news on that soon. Okay. Now, what are the main principles that underlying Islamic products and services? Okay, I touched upon the fundamental principle of everything being owned by God, and man only acting as a trustee of the resources that he has been endowed with. So we read, of course, in I'll go through what is actually prohibited first. The main thing we all know is about riba. Okay, riba actually means riba means an increase, and riba is not allowed because money in Islamic finance has no intrinsic value. It is only considered to be a medium of exchange, and as a medium of exchange, it cannot generate a return because it has no value. So you can only choose use it for a medium exchange. You can't give it to somebody and say it has a value and I want to return on it. Where there are two types of riba, and I'll go through them shortly. One is called riba al-nisa, which is what is set out in the Holy Quran, and then there is riba al-fadl, which is what the Holy Prophet tried to ban certain practices of the Muslims that led to effectively disguised riba. And just to point out that, when financial crisis came, and also during COVID, most all the major central banks of the world resorted to nil rate of interest to expand, to allow the economies to grow. And in fact, Islam introduced this practice 1400 years ago because it was at that time that Islam was growing and the Muslims needed money to expand. Uh, uh, so banning interest was, in fact, you might say, the quantitative easing that took place 1400 years ago. Now, just to go through riba itself, I'm not going to go through this in detail, just to explain that, in fact, the prohibition on riba came in stages. Okay, so like the first stage was indirect, where we read in the Holy Quran that which you give as increase to interest. So that which you give as interest to increase people's wealth increases not with God, but that which you give in charity, seeking the goodwill of God, multiplies manifold. And then the second stage was when it actually condemned interest. Right? And for those taking interest, even though it was forbidden for them and the wrongful appropriation of other people's property, we have prepared for those among them who reject faith a grievous punishment. So there was a condemnation of taking interest. The third stage was direct prohibition, right? Where we read in the Holy Quran, believers do not swallow riba, doubled and redoubled, and be mindful of Allah so that you may attain true success. But the fourth stage, which was complete prohibition, actually came after the Battle of Hunain. As we heard in the khutbahs, Hazur's latest khutbahs about the people of Taif, what they actually, although first they rejected Islam, but later on when they accepted Islam, right, they still they still practiced charging interest. In fact, one of the main sources of income was to lend money. And when the Holy Prophet learned about this, he condemned them and said, you can't charge interest on the loans that you have given. And at that time, right, the complete prohibition came, right, where we read it, which is actually contained in Surah Al-Baqarah. And this came really near the end of the Holy Prophet's life, this prohibition. And we have there in the Holy Quran, in verse 27, 276 to 281, right, of Surah Al-Baqarah. Let me just read out what it was. I don't have the full text here. But just what I put there is, in the Holy Quran we read that those who devour interest do not rise except arise one whom Satan has smitten with insanity. That is because they say trade is also like interest, whereas Allah has made trade lawful and made interest unlawful. Allah will blot out interest and will cause charity to increase. And then God says, "O those who believe, fear Allah and give up what remains of interest if you are believers. But if you do it not, then beware of war." That's a very powerful word that has been used, that we should beware of war from Allah and His Messenger. And if you repent, then you shall have your principle. Thus you shall not wrong, nor shall you be wrong. So it's a very powerful message there, that charging interest, actually, God will declare war on you. Okay. The Holy Prophet ﷺ, as I mentioned earlier, had also prohibited certain practices that the Muslims were engaged in, which effectively disguised riba. There was a practice where people used to, exchange commodities, right, by taking lower quality commodity and giving higher quality commodity. So that was giving like an excess amount of goods to another party. So there's a famous hadith of the Holy Prophet where he says that sell gold in exchange for equivalent gold, sell silver in exchange for equivalent silver, sell dates in exchange for equivalent dates, etc. And for wheat and salt and barley, the same thing. He further stated that sell barley in exchange for equivalent barley, but if a person transact in excess of different qualities, it will be riba. Right? And then he said, sell gold for silver on condition it is a spot sale, and sell barley for dates on the condition it is a spot sale. So basically, what we have is that if you want to use like gold or silver to buy commodities, then you have to do it on spot basis. This and scholars actually over the years have debated about these conditions, and they have been trying to define it. Okay. Now, the other thing, other than interest, right? There are these other haram activities that that we should be mindful of. First is what we call gharar. Gharar actually is prohibited in the Sunnah. It means danger, hazard, and above all, uncertainty. If you have undue uncertainty, like the Holy Prophet ﷺ said, do not buy fish that is in the sea. I mean, you don't know how much fish you're going to catch, so don't buy it because it is uncertain. You don't know how much you're going to get. So he forbade that. And therefore, like modern insurance, indemnities, and all these things are forbidden in Islam, Islamic finance. Okay. Second thing is, which is now contained in the Holy Quran, is like misr, which is speculative behavior. Right? Speculating, kimmer, gambling is disallowed. Okay. So derivatives are also forbidden because of that. And haram activities such as investing in alcohol, pork, and related activities, tobacco, gambling, pornography, all these activities are banned in Islam. But what Islam does is it imposes zakat as an obligatory tax that all Muslims should pay on most valuable and savings held for a full year. And that is actually to purify your wealth and encourage circulation of money to achieve growth in economic activity. So these are principles that we need to actually remember that other than interest, we have other prohibitions. And these are very important when we look at Islamic products. Other than the main Sharia principles, and and what I've actually been saying earlier, these are all also set out in the books of the Khalifas. And they have also emphasized on these other matters, which is like honesty and fair trade. Right? When we are undertaking any kind of commercial activity, we should be honest in our dealings. Okay. We should have full disclosure. Right? It is our duty to disclose all which is not that we can easily absorb. Right? If there's a fault in the goods that we're trying to sell, we should actually tell another party that this good is, something is not all perfect when you sell them. Right? We should avoid misrepresentation. Right? So we shouldn't make any false declaration. Right? And in fact, the Holy Prophet ﷺ said, one who misrepresents is not among us. The other thing that was forbidden, and the Holy Prophet ﷺ specifically forbade that, was that somebody selling over and above another person. Right? A person cannot interfere in a transaction that is concluded. So if two people have already concluded a transaction, you can't come and gazump a transaction. Okay. You can't come and try to sell somebody or take some goods which have already been sold from another party. Hoarding, in fact, is something which has been specifically set out in the Holy Quran, is that, behold, you are those who are called upon to spend in the way of Allah. But if there are some who hoard, are niggardly, and whoso hoards is niggardly only against his own soul. So hoarding is again something that was frowned upon by the Holy Prophet ﷺ, right, during his lifetime, saying that, you know, if you have excess wealth with you, then use it. But don't just don't just put it behind your closed doors. Okay. The other thing was that the sale of goods and assets in the open market. This basically is that when you sell something, right, the assets should be sold in the open market, and parties, buyers and sellers, must be aware of the state of the market before any transaction is concluded. Right? Buyers and sellers should not take advantage of each other's ignorance of the conditions and prices prevailing in the market. Well, nowadays we can say that we have good knowledge of the prices because you can shop around and you can check and compare prices before they do that. But in the olden days, you couldn't. People took advantage of that. And what important was that you shouldn't take advantage of a seller's helplessness. Somebody who is really under stress and want to sell and is forced to sell, you shouldn't take advantage of that part of that person. In addition, there are certain ethical principles that we also have to follow. But integrity, I mean, we must be honest again, as I said before. Okay, integrity is highly valued and should govern all our acts. Sincerity, a person has to always act with sincerity and should be fair and just in all his dealings. Righteousness is, you know, a person has to have the ability to perform his duties and should also strive to reach righteousness and perfection in all his religious, social, and economic obligations. Okay. And piety, again, is something that, you know, we should observe in our day-to-day dealings. In fact, if you look at our social values and if you look at the Sharia principles, you can relate them to the social values which are now being promoted in the market. In fact, the prohibition of riba, gharar, haram items, and hoarding can be related to principle of stewardship, right? Honesty and fair trade, right? Full disclosure, avoiding misrepresentation and consumpting, and the sale of goods and assets in open market based on the principle of integrity and sincerity, and not taking advantage of sellers' helplessness is linked to the Islamic obligation to act in a charitable manner. So these are basically the principles. And what is the result of these principles? Okay, I mean, the four main things I have just set out here, of course there are much more, is that, and this gives the characteristic of Islamic finance and trade. Because first of all, Islamic finance is asset-based. Right? The most important thing is that all transaction must be based on asset that actually exist at the time of transaction, and they must be clearly defined and have value. But this is to avoid gharar in any transaction. And whereas if you look at the modern financial system, right, they don't care about that. You can go and give money, you can go into derivatives, into options, and all these kind of trades, but which are not actually asset backed. Okay. The investors have to share risk. Of course, we all know that we have to share the risk, right, to avoid any type of riba or interest in our transaction. Right? And more important is that one participant cannot guarantee the return of capital for another party. And as I mentioned earlier, when we talked about introducing Islamic banks in the UK, okay, the issue that we had to solve with the regulator was that how can the banks avoid providing guarantee on the deposit and saving accounts. And we came up with a solution. And as I say, we can discuss the solution after this talk. Okay. Haram activities, right? So as I mentioned before, we have to avoid in any finance or trade activities anything that is haram. Okay. And then above all, we have to purify any wealth that we have earned or accumulated over time to give a share to the needy and the poor, and as well as to provide for the general needs of the society. So these are main Sharia principles. All right. The Islamic products, which I'll just touch base on. I won't go through them in detail because I don't know how much time we have left.
We have we have about 20 minutes left, but we want to build in some Q&A time in there as well.
Okay, let me just quickly explain this, and then we can go for Q&A. Okay, you see, people need to invest. Okay, if they have wealth or excess cash, they want to invest, and businesses need to raise finance for both working capital and growth. Okay, Islamic finance market has responded to this by refining financial instruments that have been developed by these early medieval schools to meet the modern needs. If you look at the Islamic financial structure nowadays, you find they have what is called equity products, which are like Mudaraba, Musharaka, and Wakana, where you actually share in the profit directly. Then you have debt-like instruments, which is Muhabba, Ijara. Ijara is actually just leasing. Diminishing Musharaka, which is mainly used for home purchases. Istisna and Salam. Now, all these names I'm giving, I can go through them in detail, but this will require a lot of time. Okay, and then you have just giving of simple loans called Qard Hasan. And the thing that Islamic market, the issue that we face is that the range of instruments are quite limited. We can't do all these kind of instruments that are available in the commercial market, and that's the reason because, well, firstly because of regulatory and tax requirements, especially, and other things because of Sharia requirements. There are haram, many of the things that are being done in the commercial market. So let me stop at that. And has anybody got any solution to the question I raised about the deposit?
We don't seem to have a solution, but there are quite a few questions on other areas during your presentation, Nansab. But no, this was a very informative session. I don't know if you want to provide a response to how you tackle this issue. If anyone does have any response, then please either unmute yourself and speak or type it in.
If not, that meant maybe I can give a solution. Okay. We took some time when I was there, and in fact, I came up with the solution, and it was finally accepted by both the Sharia scholars and the regulators. And what we did was we said that in the Western economies, because the banks have to guarantee the return of capital, right, they state in their contracts that the banks have to return the capital. If there's a loss, they still have to make good the loss because of regulations. But if you're a Muslim, right, and you realize that there is a loss on your capital, then you don't have to take that amount. Okay. So as a Muslim, if I know that a bank has incurred losses on the investments that I made, or in any fund, if there are losses, and I'm a Muslim, I have to then state that, sorry, I'm not going to accept this compensation from the bank. It include my loss. Hello, somebody spoke?
There's a few questions in the chat here, one from Tanzil Ahmed. Assalamu alaikum. Uncertainty is involved in many things that you may buy, such as buying a second-hand items, i.e. buying a second-hand car. You can only check so much, but you can't know for sure if this will work in the long run. Would this be gharar?
This will be, if you buy something which is that certain of, it will be gharar, right? But if you have done all your checks, like you got somebody to go, and if you got a garage to go and check out the car, and although they might not be able to find all the defects, but they'll be able to show you the main issues that the card has, then that is no gharar. If you've taken the steps to minimize any uncertainty, then that is no gharar.
Jazakumullah. I hope that answers your question, Tanzil Saab. Next question from Umar is, if the Islamic banks are owned or backed by non-Muslim interests, how are they making profits out of, for example, an Islamic mortgage, if there's no interest?
Okay, Islamic banks, as I said, there is, if you look at Islamic banks, they're not backed by, well, I mean, anybody can invest in Islamic banks, whether you're Muslim or you're not non-Muslim. Okay. But the way they structured the Islamic mortgage, which, as I said, one of the product used is called diminishing musharaka, which is a partnership whereby the bank buys the property. Right? Let's say the property is worth 500,000. Right? The bank buys the property for 400. Sorry, you entered into a partnership with the bank. Right? Let's say you have a deposit of 100,000, and the bank is going to provide you with funding of 400,000. Right? What you do is that you enter into a musharaka agreement, which is a partnership agreement, okay, with the bank, right? And the bank then goes ahead and buys that. You give the 100,000 to the bank, and the bank then goes ahead and buys a property, right, for 500,000, and then it actually sells you its share of the partnership, right, over a period of time. Let's say it might be 10 years, 20 years, or whatever time, right? It is they sell you that property. The share of the bank, which is not yet bought by the party, but they charge rent on that. And that is how the Islamic mortgages work under diminishing musharaka. There are other ways to do mortgages, but this is one of the most common way that you can do that, because leasing a product and charging rent on that is allowable under Sharia.
Jazakumullah. Okay, we've got quite a few sort of like mortgage-related ones. I'm going to combine as one question from Asif Saab. And this is probably interlinked. It says, first part is, so if I have a normal mortgage, what can I do? And the second part of the question is, in this Western society, it is a debt-based system. So how can we get away from every debt-based product, such as loans, credit cards, mortgages, and insurances, etc.?
Okay. Well, as I mentioned, I mean, Islamic finance in the UK, I can't talk about Europe as such, because UK is much more advanced than the rest of Europe in this regard. The governments have made, what has been for when I was setting up the first, working on the first Islamic bank, we came up with the regulatory and tax changes in the UK to accommodate Islamic finance. Now, unfortunately, at that time, the tax authorities, the Treasury, only came out with, I think, 5 products, okay, and then they added on to that another 2-3 products after that, okay, which you can do, and that are whereby the profit that is earned on those products is then treated like interest for tax purposes. And that's how we came across that problem. Now, in the UK now, there are banks available who can give you finance on a Islamic basis. So, as I said, is a first stage. I mean, it's an early stage of developing this market, and the more there is demand for that, the more there will be products available to to the Muslims.
Jazakumullah. Okay, I see Munir Saab, you have your hand raised. Feel free to please come off mute.
Yeah. Assalamu alaikum, thank you for that very informative talk. This question about rent on the mortgages, is this linked to what is the current rental market, or is it linked to maybe an interest charge? Because, we're seeing this huge upward movement in rents in this country. And so how is this pricing of done on the mortgages, is it done relative to what actual rental rates are, or is it linked to what interest rates are?
Okay, let me give you an answer in this manner. Okay, first of all, the ideal what Sharia imposes is that it should be based on the rental value, the general rental value, right? Or if at whatever you have agreed. One of the things in Sharia is, and I should point that out, is that there are no guidelines on how you set a profit. Okay, or rental income. So the rental income can be as discussed between the bank and the individual, or it could be based on some it could be based on a market-based rate, right? I mean, normally, and what happens in the UK, and in fact in the wider Islamic market, because we're competing, because Islamic banks are actually competing against conventional banks, right? A Muslim who goes to an Islamic bank and he says, okay, I want to have a mortgage, and the bank says to him, well, I'm going to charge you, the current rental rate. That guy will say, no, thank you, and he'll go away, right? And he'll go and get a mortgage from the conventional bank because it's much cheaper. So the Islamic banks have to compete against conventional banks. A time will come when, of course, if we have total Islamic market, then the banks will be able to charge what is considered to be a proper rate for the rental. But because they have to compete, they say, okay, if the other banks are charging you, let's say 4%, right, we will not charge you rent which is more than what you may have to pay to the conventional banks.
Jazakumullah. And I'm very conscious that time is running by very quickly as well. We'll carry on with as many as we can. One thing that we'd love to do at this stage, this is obviously Jazakumullah for everybody taking the time out to come today. We've got a quick poll that I'm just going to launch in the screen, just to help us to make sure that we're, going along the right track. 2 parts to it. First part is just a very simple 1 to 5 on what you think how this talk went for you and what your sentiments are towards it. And then a second is an optional question. If there's any particular topics that you would love to see as part of our series of talks, please feel free. So we'll leave that up for a minute or so. While that's going on and people are answering, I'll just quickly move. Very interesting set of questions here. And also there's an interesting one here. Assalamu alaikum. Is saving money for the future for future use considered hoarding in Islam?
If you are setting aside funds that you need, right, and you know you will need, right, in the future, let's say that is not hoarding. Okay, hoarding actually arises where you have excess funds that you don't need and you put them aside, right, under your mattress or in big bank accounts, okay, which are not being used. Then that is hoarding.
Jazakumullah. Just to let everybody know, we're keeping tracks. I know we might not have enough time for answer all the questions, but we will try and pass these questions on to Manan Sahib and get these across to some of the users as we can. There's another question here which comes across very commonly across our department, and this is to the relating of cryptocurrency. So the question is, crypto is seen as a non-interest bearing currency that is not lent into circulation with interest. What is your view on crypto as a non-interest bearing medium of exchange, not as a speculative investment?
Crypto as a medium of exchange, that is fine, because right now all money that we have is fake money, what we call it, right? Although it says that if you take a note, a £1 note to the Bank of England, they should give you gold in exchange for that £1 note, but nobody will give you that gold in exchange for £1 note. Is all what is based on promises. Okay, so crypto, right, is just a modern way of doing transactions. Now, speculation in crypto is not allowed, but using crypto as a means of recording transactions between parties. Just give me 1 second. Okay, recording transaction between parties is quite valid.
Jazakumullah. There's another couple of questions here, which are both linked from two separate users relating to insurance. Sorry, please.
Just clarify, okay? When we talk about value to a cryptocurrency, okay, it doesn't actually have any value. It is just an algorithm that allows people to record transactions, okay, between themselves. I mean, just like barter economy. If you take the old days where people had commodities, they used to barter one commodity for another commodity, okay. And nowadays you can use crypto algorithms to exchange, to enter into exchange. Itself doesn't have a value, and that is very important to understand. Thank you.
Jazakumullah. The next questions are relating to insurance. In the Western society, insurance is compulsory in many matters. Then what do we do?
Okay, so actually I mentioned about ijtihad. One of the things of developing Sharia principles for modern age is to look at insurance. Insurance is a very difficult subject, but there are products which are called takaful, and what it is a pooling of interest, a pooling of resources or funds by people who want to, let's say, if you have properties, if people have, everybody wants to insure their house, okay, so everybody put their money into a pool. It is put into a fund, okay. You appoint a person to look after that and to pay out. And part of that arrangement is that you agree that if one party suffers a loss, you will allow your funds to be used for that loss to be made good. And that is the underlying principle of what we call takaful. Okay. So there are products available for insurance. There are, unfortunately, in the UK, right, the companies that were set up have not succeeded very well because they were not properly organized. But this is something that is being looked at.